Okay. Now regarding the taxation proposals. Okay. Now regarding the taxation proposal. So this personal income tax. Okay. One important announcement this year's budget is that okay, a new personal income tax regime have been announced in this year's budget. Okay. A new tax slab has been provided for those who are voluntarily ready to join this new tax regime. Okay, so this new personal tax regime is first important point to note down is that it is voluntary. Okay, if you want to join, you can join, but when you join, you have to give up. Okay, nearly 70 tax exemptions and tax deductions. Okay, under the old regime. So if you join the new regime, you will be means you have to forego many tax exemptions and tax deduction, nearly 70 out of 100 tax deduction, tax exemptions, and it is only optional. Okay, so this new tax regime is optional. Okay, if anyone who want to continue the old regime, they can continue. Okay, in the new regime, this is the tax slab. Okay, up to 2.5 lakh it is tax exempted. Between 2.5 to 5 lakh it is 5%. Between 5 to 0.7 lakh it is 10%. Between 7.5 to 10 lakh it is 15. 10 to 12.5 lakh it is 20%. 12.5 to 15 lakh it is 25%. Above 50 lakh it is 30%. This is the old existing rate. Okay. So if you want to continue in the old in personal income tax regime, you can continue, provided you have to means then if you are continuing the old personal income tax regime, you will get all the tax deductions and exemptions. But if you switch over to new tax regime, you have to forego nearly 70 out of the 100 tax exemptions and tax deductions. Okay, this is one very important announcement made in the budget. I have covered in detail again in a question answer discussion in the new personal income tax regime. Those who want to know more, you can watch that YouTube video. Okay, then regarding the trends in the tax receipts, okay, UPSC used to ask, okay, what is the trend in the tax receipt? Again, regarding the trend, there is no continuous increase or no continuous decrease. Okay, so from this you can see that okay, in the financial year 2011-12, okay, out of the GDP, 10.2% of tax receipts is there. Okay, 2.2% of GDP. Okay. Now again in this year's budget it is 10.8%. Okay, so there is no major variation. Okay, so it has increased, then it has decreased, it has increased and it has decreased, and further it is increasing. Okay, so somewhere the maximum gross tax receipts, it was in the year 17-18 period where it was around 11%. Okay, a bit of 11.2 something, etc. Okay, so we in the India's recent history, we have never touched our gross tax receipts up to 12% of GDP. So that is a very bad thing. We have to improve our gross tax receipt percentage of GDP. Okay, and again you need to keep in mind is that out of this 10.8%, 5.9% is contributed by direct tax, 4.9% is indirect tax. So this can be a potential question. Okay, what is the total percentage of the gross tax receipts? Which one is high, gross direct tax or indirect tax? Direct tax is high. 5.9 is contributed of 9% by direct tax and 4.9% by indirect tax. Then, and another important announcement regarding taxation is that okay, Finance Minister have made a proposal to remove DDT, Dividend Distribution Tax. Okay, so the budget have announced to remove Dividend Distribution Tax and adopt a new system where dividend shall be taxed in the hands of the recipients. Okay, so you know that dividend is paid by the company. Dividend is paid by the company to whom? Company to shareholder. So dividend is paid by the company to the shareholder based on company's profit. Okay, and what happened is that to this dividend the company paid to the shareholder, government have imposed a tax, what is called as Dividend Distribution Tax, and it is 50% of the profit. Plus there used to be cess and surcharge, and it used to come around 2.56% for the company. So other than the corporate tax, so this was a huge tax for the company. It have to pay corporate tax, it also have to pay dividend distribution tax. So it is a long request from the corporate and other major committees. Even the direct tax code panel also recommended to abolish dividend distribution tax. So now this dividend distribution tax, the company no need to, see earlier the company used to pay this tax. It is a direct tax, dividend distribution tax is a direct tax. Now company will not pay this tax. Rather the recipient, the shareholder will pay the tax. And how? Based on we have seen that the personal income tax regime, okay, each income tax holder will be coming under one tax slab or tax bracket. So which tax bracket he belongs to, based on that he have to pay the tax. Okay, so this is the new proposal the finance minister declared in this year's a very important announcement regarding taxation. Okay, so now the dividend will be taxed at the recipient, that is the shareholder. At what rate? The tax rate applicable to their income. Okay, so which tax bracket he comes under, that much percentage of tax he have to pay, because it will be coming under sources or means income from other sources. Okay, he'll have to show that, and companies will no longer be required to pay dividend distribution tax. Okay, so the tax of the company's burden will be now over. Dividend distribution tax will be over from the financial year 2020-21. Okay, so this is a very, very important announcement. So because of this announcement, UPSC can ask a question regarding dividend distribution tax. So you are supposed to know about this tax. It is a tax levied on dividends that a company pay to its shareholder out of its profit. Now, currently in this year's budget have abolished this tax both at the company level and at the mutual fund level. Now the recipient only have to pay this tax. Earlier the distribution tax, DDT, used to be for the company used to be 15% plus cess and surcharge. Then net final tax burden used to be 20.56%. Now, so this company no need to pay tax, but recipient have to pay the tax. So how the company will do is, the company will deduct it. So before making any dividend, the company will deduct tax at the source. So TDS at 10%. Okay, tax will be deducted at 10%. TDS, that is tax deducted at source at 10%. If the dividend income is excess of rupees 5,000 per annum. Okay, so at TDS will be cut at 10%. So before giving the dividend to the shareholder, 10% TDS will be deducted before giving this dividend payment. Okay, and that's the condition is that if the dividend income is above 5,000 per annum. So these are the changes made regarding DDT in this year's budget. Similarly, this year's budget also have made some important announcement regarding tax concession for sovereign wealth fund. Okay, tax concession for sovereign wealth fund. One important decision is that there is 100% tax exemption. Okay, so a foreign investment by sovereign wealth fund. Okay, try to understand what is the sovereign wealth fund. Okay, so basically sovereign wealth fund are wealth fund by an institution mainly backed by a government. Okay, so for sovereign, only for sovereign wealth fund, if they are making any foreign investment in India, if a sovereign wealth fund, if they are making any foreign investment in India, there will be 100% tax exemption to the, so sovereign wealth fund, their interest they earn, the dividend they get, capital gain they make, to all these, that is to the interest, dividend and capital gain, a foreign investment by a sovereign wealth fund will be tax exempted if they are making the investment in infrastructure and other priority sectors. Okay, condition. Okay, if a sovereign wealth fund is making investment in infrastructure and other priority sector, for their interest they earn, the income or the dividend they earn, as well as the capital gain they make, the 100% tax exemption will be there till the investment they made before March 2024. Okay, so all the investment made by the sovereign wealth fund in infrastructure and other priority sector before March 2024 will be 100% tax exempted, and but with the condition that they should go for this investment should go for a lock-in period of 3 years. They should at least make that investment, they locked in India for 3 years by the sovereign wealth funds of foreign government. This can also be a potential question. The condition is 3-year lock-in period, investment has to be in infrastructure and other priority sector, and if they are making the investment prior to March 2024, their 100% tax exemption will be there. Very important announcement made in the budget to promote foreign investment by sovereign wealth fund. Then another important decision taken is regarding a new scheme to deal with the tax disputes in relation to direct tax. Okay, so in order to reduce the tax disputes in direct tax between the taxpayer and the government, the scheme was announced in the budget 2020. It's basically a direct tax scheme for settling tax disputes between the individuals and income tax department. And under this scheme, a complete earlier the scheme offered complete waiver on interest. There will be a complete waiver on interest and penalty. So there will be a complete waiver on interest and penalty to the taxpayer if he is making a full and final settlement before March 31st, 2020. But this date have been expanded. It says that okay, an individual and also it said that an individual opting for settlement after March 31st, they have to make an additional 10% penalty. So this have been taken away, and it says that if a person is making, if the dispute is settled before December 30, 2020, he need not to make any additional penalty. Okay, so basically the scheme, again this Vivad Se Yusha scheme was discussed in detail in a previous year question discussion, it is available in the YouTube. If you want, you can watch it. But basically the scheme is about reducing the number of cases, disputes currently pending in the court regarding the taxpayer and the income tax department. Now, important decision regarding indirect tax is that, okay, in relation to GST, in order to strengthen GST, a cash reward system has been proposed in this budget. Okay, so those customer who seek invoice. Okay, normally when you purchase something, generally we don't ask for the bills. Okay, a customer who seeks invoice, in order to incentivize them, a cash reward system have been proposed. So how it will be implemented, we don't know. It is a proposal. So more customers will ask for the invoice, and thereby all the transaction will be reflected in the GST system. Okay, so and thereby the government can improve more revenue, GST revenue. Okay, and also it has recommended a simplified return with features like SMS based filing for nil return. Okay, so if you are a GST registered and if you have no GST to make, you can make a nil return through SMS. Okay, and also there is an improved input tax credit flow to be implemented from first. So an improved input tax credit will also be implemented from 1st April 2020, both in the form of a pilot project. Okay, and also the government is coming up with Aadhaar based verification of taxpayers. Okay, Aadhaar based verification by being introduced to weed out dummy or non-existent. So all the taxpayers will be verified through Aadhaar is to weed out dummy or non-existent units. Okay, so these are some decisions being taken in the budget regarding GST. Now regarding customs duty, for some items custom duty have been increased, some might have been decreased. For footwear and furniture goods, customs duty have been increased. For footwear, it have been increased from 25% to 35%, and for furniture goods, it have been increased from 20% to 25%. And then for basic customs duty on newsprint and lightweight coated paper, mainly for printing purposes, the customs duty have been reduced from 10% to 5%. And for electric vehicles and parts of mobiles, customs duty have been revised. And also the government have imposed a 5% health cess on the imports of medical devices. Okay, so on medical devices, if you are importing other than the customs duty, there will be a 5% health cess. Exception being, there are some medical devices which are exempted from basic customs duty. Except for that, there will be no health cess will be there. But where there is an basic customs duty is there on medical devices, from this year onwards, there will be a 5% cess will be 5% health cess will be imposed on that particular medical devices. And some measures regarding trade policy measures also have been announced in the budget. Okay, Customs Act have been amended to enable proper checks of imports under various free trade agreements. And this rules of origin requirements will be reviewed for certain sensitive items. We have discussed all these concepts. Rule of origin is basically look into whether the product is originating from that country where we are having free trade agreement. Okay, so that will be reviewed. Provision regarding safeguard duties to be strengthened so that our domestic industry will be prevented from continuous increase in imports. Okay, and there is also provisions for checking dumping of goods and also imports of goods, subsidized goods will be strengthened. Okay, so some important trade policy measures to reduce import and to ensure that only genuine goods are coming to India have been introduced in this year's budget. Okay, so this also you keep in mind. Okay, now regarding excise duty, I already told you there are some products which is not included under GST. For that there is still union excise duty is there. So the excise duty have been increased to cigarettes and tobacco products, but for BD there is no change in the this union excise duty. And for anti-dumping duty on a particular product, that is purified terephthalic acid, have been abolished because this has been used as a very important input for textile sector. So in order to promote the textile sector, anti-dumping duty on PT or purified terephthalic acid have been abolished. These are decisions regarding the tax related decision being made in this year's budget.